Welcome back to the Deep Dive. Today, we're really getting into it with the global market wrap-up for July 4, 2025. Our plan, as always, is to unpack what moved the markets, figure out why, and pull out some useful insights for you from today's reports. And today, well, it's quite the story. India showing some domestic strength against, this backdrop of global jitters, especially with those tariff deadlines coming up.
Yeah, absolutely. It felt like a real balancing act today. Local resilience versus quite a bit of international caution.
Okay, so let's dig into India first then. Despite everything happening globally, the Indian markets held up, well, reasonably well. The Sensex closed up, 0.23% at 83,433, and the Nifty 50 also up slightly, 0.22% at 25,461. From where you sit, what were the core strengths holding things up today?
Well, what's really fascinating, I think, are the specifics. Which stocks, which sectors did well. It tells you where the money's feeling safer. We saw decent gains in names like Bajaj Finance, up 1.7%. Infosys did all right, up 1.3%. And ICICI Bank climbed 1.2%.
So finance, tech, banking. Interesting.
Exactly. It suggests confidence there, even with global clouds gathering. But then, on the other side, you had Trent. Big drop there, down 11% apparently on a Q1 revenue miss. And Tata Steel was also weak. Sector-wise, oil and gas, pharma, IT, banks, they were the winners. But auto and metals, they definitely felt the pressure today.
Okay, interesting mix. So beyond just the numbers and sectors, what were the actual drivers? What was pushing and pulling the market today?
Yeah, three things really stood out. First, and this is the big one, the global uncertainty around tariffs. Everyone's watching that U.S. July 9th deadline.
Right, looming large.
Definitely. Second, there was the SEBI ban on Jane Street. That's the Regulator Securities and Exchange Board of India. But honestly, most analysts seem to think that was, pretty specific to Jane Street, not a wider market issue, really.
Okay, contained.
Yeah. And third, and this is key, you had domestic retail investors and the DII, domestic institutional investors, stepping in and buying. That provided some real support, kind of a counterweight, especially as the FIIs, the foreign institutional investors, were, let's say, staying cautious.
So local money providing a bit of a floor. And technically, for the chart watchers out there, how's the Nifty looking?
Technically, the Nifty seems to have found some support near that 25,400 level. Resistance looks like it might kick in around, say, 25,500 up to maybe 25,800.
Okay, but how much stock, realistically, can we put in those technical levels right now when you've got these big global things like tariffs that feel like they could just blow through any chart pattern?
That is the million-dollar question, isn't it?
Yeah.
Technicals give you a map, sort of, but big macro events, especially trade stuff, they can definitely throw things off course. It's always a balancing act.
Speaking of those global factors, let's pivot. U.S. markets were closed, obviously, for the July 4th holiday, but their futures were trading, and they were down around 0.6% to 0.7%. Those tariff fears again, it seems.
Yeah, and if you look wider, that nervousness spread. Most Asian markets slipped. European markets, too. Germany's DAX, for example, down 0.6%. South Korea's KOSPI took a bigger hit, down 2%. Same story, really tariff jitters. Oil prices dipped a bit too, and the dollar softened against the yen and euro.
So it really feels like this tariff deadline pressure is just kind of the main theme everywhere globally right now. How deep is this impact, especially when, U.S. stocks themselves, the S&P, the NASDAQ, they've been hitting record highs? Seems like a disconnect.
It is a significant impact, and it's creating this divergence you mentioned, that strength in U.S. equities.
Yeah.
A lot of that seems tied to this America First confidence, plus their lead in tech and AI.
Yep.
It lets them sort of shrug off some of the global trade worries.
For now, anyway.
For now, exactly. But the rest of the world,
Yeah.
much more exposed, much more sensitive to these immediate tariff headlines.
Okay, so pulling all this together, what's the practical takeaway for you, our listener, planning for next week when markets reopen, both here in India and globally?
Right. Well, for India, the feeling is it might be a relatively quiet start to the week. Trading probably staying in that 25,400 to 25,550 range for the Nifty, initially at least. Globally, though, expect markets to be maybe a bit thin because of the holiday hangover and super sensitive to any tariff news. So caution is probably the watchword.
And strategy-wise, any tips coming out of today's analysis?
Yeah, the advice seems pretty clear from the reports we looked at. Consider holding or even adding to positions in those momentum names we mentioned, like Bajaj Finance, Infosys, ICICI Bank. But maybe trim some profits on realty stocks that have had a big run, especially if this global fear picks up again. Generally, avoid Trent for now, Tata Steel, and probably the broader auto and metal sectors, unless you see a really sharp bounce offering a selective entry point. And maybe the most important things, hedge your short-term exposure if you're worried about global volatility and, stay focused on strong domestic core holdings.
Mm. So today's deep dive really underlines that tension, doesn't it? India's own market strength pushing against this quite heavy global uncertainty, particularly on trade. It sounds like a tricky path to navigate.
It really does. And it raises, I think, a really important question for everyone watching this space. Just how much can that domestic strength, that DII buying, really insulate the Indian market from these big global trade shifts, especially with July 9th getting closer?
A crucial question indeed. Definitely something to keep thinking about as we head into next week's trading.